Good day, students. This is Professor Alexander Buchholz coming to you for Accounting 446, International and Nonprofit Accounting. Talking today about Chapter 17 of our text, Accounting for State and Local Governments, a continuation, Part 2 of 2. Again, looking at this chapter, we're going to look at it from a theoretical basis. So let's talk about our first learning objective, and that first learning objective is understanding how the hierarchy of U.S. generally accepted accounting principles for state and local government accounting can be used to resolve financial. So let's look at the hierarchy of U.S. GAAP for state and local government. So again, as we saw in the last chapter, when we start to look at a state and or local government, we're talking about a different playing field at that point in time. It's a little bit different than the normal GAAP. So again, governmental financial events can be just as unusual, just as complex as those in large for-profit entities. So again, we're going to do a governmental or state. Again, so we're looking at New York, we're looking at Connecticut, New Jersey. All the states have their own set of governmental accounting standards. And for most transactions, the appropriate application of U.S. GAAP, not a serious collection. Again, most events really in government are tax collections and bond issuance, which occur with such regularity that the reporting is common and consistent from municipality to municipality. So periodically we have events that can arise or be created that may not lend themselves to easy reporting solutions. Please note, ladies and gentlemen, that that's more of an exception to the rule than the norm. So just keep that in the back of your mind. So we have different rules can sometimes provide guidance that may be contradictory to the untrained eye. For financial statements to be in conformity with U.S. GAAP, so state and local government accountants must be able to establish the validity of the suggested reporting. And the same will also hold true for those that are doing the audits of state and local. So the GASB, again, Government Accounting Standards Board, and that's the authoritative body who governs the accounting and reporting for state and local governments. It's not the FASB, it's the GASB. And in statement number 76, they established the hierarchy of generally accepted accounting principles for state and local governments. And this pronouncement was really designed to provide reporting guidance whenever the question of establishing conformity with GAAP arises. All resources of authoritative U.S. GAAP for state and local governments, very similar to FASB, has two categories, Category A and Category B. Category A is authoritative, whereas Category B is non-authoritative. In Category A, the first level of authoritative rules is made up by the official statements of the GASB. Category B, technically the non-authoritative, that's comprised of technical bulletins, implementation guides, literature of the AICPA. Again, they do serve in the same functions interpretation as the technical bulletins. The implementation guides clarify, elaborate on existing U.S. GAAP. But if you are having a debate with your client, the more authoritative guidance is going to be Category A, not Category B. Learning objective number 2. Explain the informational benefit from required disclosure of tax abatements provided by the state and local governments. Prior to the GASB statement number 77, for years taxpayers have questioned whether the estimated $70 billion in subsidies government shower on the free enterprise system each year are savvy investments or corporate welfare run amok. So in statement number 77, the GASB will now require governments to disclose how much tax revenue they are foregoing because of incentives that were given to businesses. State and local governments and school districts will have to disclose the job promises and other commitments businesses make in order to avoid paying the taxes. Tax abatements have been a common carrot that communities use to attract development. So again, what is a tax abatement? We're going to not maybe tax as heavily an incoming business developer. Why? Because you want to give them the opportunity to not have to pay so much taxes in terms of property taxes that they would not have to be around in the following year. Because they feel, well, gee, I'm paying so much in property taxes, I can go to another municipality and kind of, be happier with them. The GASB recently ruled that a state or local government must disclose significant information about abatement agreements, and those include the purpose of the tax abatement program, the type of tax being abated, dollar amount of taxes abated, the type of commitments made by the tax abatement recipients, any commitments made by the government or other parties, so for example, agreeing to construct an infrastructure asset such as roads. The third learning objective: to recognize the liability caused by the eventual closure and post-closure costs of operating a solid waste landfill. So most municipalities, as you all know, have a garbage site, a garbage landfill. And the operation of a solid waste landfill creates long-term liabilities for many communities. Meaning, at a certain point in time, when we can no longer have the landfill, we're going to have to close it down. So eventually, the EPA, the Environmental Protection Agency, imposes requirements that will require large outlays of resources in the future to close a landfill. So let's take a look at how governments are going to account for this. So let's look at an example. Assume the current cost for closure is set at about $10 million, and for post-closure maintenance, $4 million. Total dollars, $14 million. Assume that during year one, the city makes an initial payment of $300,000 towards closure costs. At the end of the first year, city engineers determine that 16% of the available space has been filled. Whether the solid waste landfill is reported as a governmental activity or business type activity, closure and post-closure costs in the government-wide statements must be measured on accrual accounting and the economic resources measurement basis. So, if we look at the government-wide financials, so again, the government-wide, the one that's going to actually be in the financial statements, because the landfill is 16% filled, $2,240,000 should be accrued at the end of the first year. $14 million times 16%. The initial $300,000 payment made in this current year will reduce the liability. And take a look down here at the government-wide financial. Each year will record a portion of the expected closing costs prorated as a percentage of the capacity used, each year as an expense and a liability. Assume the landfill is 27% filled at the end of year 2. Another payment of $300,000 towards those costs are made. The city believes their current closure costs are now $11 million and post-closure $5 million, bringing the cost to $16 million. The city should now recognize an estimated cost of $16 million times 27%. Because $2,240,000 was recognized in year 1, the city should accrue only an additional $2,080,000. So again, we're bringing the total liability up to $4,320,000. And notice down here that that landfill closure is offset against the liability. Now, if the landfill is recorded in the general fund because there is little or no user fee charged, the city reports only the actual change in current resources. So, despite the huge liability, the reduction in current financial is only limited to annual payments. So again, remember what we said. If we are using the government-wide, we're on an accrual basis. If we're using fund financial statements, we're on the modified accrual basis. The modified accrual basis is only kind of reporting those expenditures when paid out. So we would debit expenditures, not expenses, expenditures closing costs $300 and credit cash. The fourth objective. Explain the reporting of a net pension liability resulting from a defined benefit DB pension plan provided to employees by a state or local government. So in a defined benefit pension plan, we have many state and local governments provide pension plans for employees such as school teachers, police officers, firefighters, and sanitation workers. These plans represent a huge financial obligation for governments. It's a very powerful pension plan to have, and it's really the best one that people can get. Now, you'll see in most of your companies that a lot of the defined benefit pension plans have been going away, either been frozen or just shut down completely because the costs are quite large and staggering. Employees usually in a DB plan are entitled to receive future benefits. Again, defined benefit, the benefits are defined based on a formula. Future pension obligations of both companies and state governments collectively will amount to trillions of dollars. And the obligations can be measured individually in billions of dollars. The GASB Statement number 66, Accounting and Financial Reporting for Pensions, changed around pension reporting. It really required the governments, the state and local governments, to do more full accounting for pension plans. Now, again, we've dealt with pension plans in the normal FASB world, but governments had a different treatment of what was shown on their financials. So again, for pensions under the new GASB, the authoritative guidance implemented the following steps. Number one, pension benefit payments that will ultimately be required are estimated by an actuary. Number two, the portion of those payments attributable to past periods of employee service is calculated. We know it as service cost. The present value of past amounts is determined in order to arrive at the government's obligation at the present time. And if that liability balance is larger than the net asset position held in the pension trust fund, the excess, the liability, is shown in the government-wide financials as a net pension liability. On the contrary, if we've got an actual pension asset, that would also be reported. So again, we're showing the funded or unfunded status in the pension plan under this new guidance in the government, again, government-wide finance. Remember, state and local governments, we're dealing with government-wide financials and fund financials, two different systems. Record the donation and acquisition of works of art and historical treasures. The fifth objective. So how would we value works of art and historical treasures? Well, again, this is not just a debate in the state and local, but as we'll see in our next discussion in accounting for not-for-profit entities, how should artwork and museum pieces be recorded, whether it was bought or received? Number one, how should works of art, historical artifacts, and other such treasures be reported in governmental financial statements? Number two, these properties have value, but are they really assets in an accounting sense? And over here we've got optional. Optional reporting is allowed, but the rule is clear. Government should capitalize works of art, historical treasures, and similar assets at their historical cost or fair value at the date of donation. In the government-wide financials, you record it as an asset if purchased, record it as revenue if donated. Fund financials. If viewed as an enterprise fund, report it as an asset. If viewed as a governmental fund, record it as an expenditure. No entry being made if the item is donated. What is the criteria for the capitalization of works of art and historical treasures? If we meet 3 of the following criteria, the recording of such property as an asset is then optional. Number 1, so again, artwork and historical treasures. The item is held for public exhibition, education, or research in furtherance of public service rather than financial gain. The item is protected, kept unencumbered, cared for, and preserved. Number 3, the item is subject to an organizational policy that requires the proceeds from sales of collection items to be used to acquire other items for collections. Learning Objective 17.6. Explain the reporting and possible depreciation of infrastructure assets. Infrastructure is defined as long-lived capital assets that normally are stationary in nature and can be preserved for a significantly greater number of years than most capital assets. The government-wide financial statements. The infrastructure costs are recorded as assets. In the fund financial, they're recorded as expenditures. In terms of depreciation, depreciation is required for all capital assets such as buildings that have a finite life, as well as capitalized art and historical treasures deemed to be exhaustible. Now, GASB provides an alternative, modified approach which eliminates the need for depreciating qualifying infrastructure. If specified guidelines are met, a government can choose to expense all maintenance costs each year instead of recording depreciation. Additions and improvements must be capitalized, but the cost of maintaining the infrastructure in proper working condition is expensed. So in the modified approach, we require the government to accumulate about all infrastructure assets within either a network or a subsystem of a network. For eligible assets, the government must establish a minimum acceptable condition level and then document that this minimum level is being met. The government must have an asset management system in place to monitor the eligible assets. This system will assess the ongoing condition to ensure that the eligible assets are operating at the predetermined level. The 7th learning objective, understanding the composition of the state and local government's comprehensive annual financial report. Very similar, guys, to maybe a 10K that we would see in the public environment for a publicly traded company. The government-wide and the fund financial statements are most often presented to the public, both of those documents, as part of the comprehensive annual financial report. In addition, though, the CFAR is comprised of several different sections. The first one is the broad section, the introductory section, which includes a letter of transmittal from appropriate government officials, an organization chart, and a list of principal officers. The CAFR also includes financial section, presents general purpose external financial statements, government-wide and fund financial statements, and the auditor's report. The government also presents the management and discussion analysis and other required supplementary information. Statistical section. This discloses a wide range of data about the government encompassing both financial and non-financial information. This statistical information can be fascinating. And again, it's very detailed and must be in that report. So usually these reports are hundreds upon hundreds of pages. Objective 8. Explain the makeup of a primary government and its relationship to component units and related organizations, as well as the combination of governments. So again, a primary government is usually a town, city, county, or state. Primary government has to include all the funds, activities, organizations, agencies, offices, and departments that are not legally separate from it. So it may be difficult to determine whether certain activities should be included. Any unit legally separate from the primary government, but where financial accountability still exists, must be included. Legally separate activities closely connected to the primary government must be included if omission from the financial statements would be misleading. Special purpose governments. A special purpose government carry out a single function or a limited number of functions. Common examples: public school, colleges, water utilities, hospitals, transit authorities, and library services. These are special purpose governments that, again, limited functions. What is a special purpose government? Well, number one, separately elected governing body. Number two, legally independent, which can be demonstrated by having corporate powers such as the right to sue and be sued, as well as the right to buy, sell, and lease property in its own name. Fiscally independent of other state and local governments. Fiscal independence. An activity is normally considered to be fiscally independent if its leadership can determine the activity's budget without having to seek the approval of an outside party, levy taxes, set rates, or issue bonded debt without outside approval. A school system or other government activity that satisfies all three of these requirements is reported as a special purpose government, and it produces its own CAFR. If that same activity fails to meet any one of the criteria, its financial transactions are likely to be maintained in the general fund or special revenue funds we saw in the last chapter of a city or county government. Mergers, acquisitions, and transfers of operations. So the GASB views a combination as a merger if two legally separate entities are brought together to form a new entity and no significant consideration is exchanged. A merger also exists if one of the entities ceases to exist while the other continues. In a merger, net carrying values for all assets, deferred outflows of resources, liabilities, and deferred inflows of resources are combined. Additional accounts are neither created nor recognized as a result of this type of combination. The ninth learning objective. Describe the physical structure of a complete set of government-wide financial statements and a complete set of fund financial statements. So we have the general purpose financials. Now those are your government-wide statements presenting financial information on governmental and business type activities. You then have fund financial statements, which are governmental, proprietary, and fiduciary funds. Government-wide, as we said, uses accrual accounting. Fund accounting or governmental funds use modified accrual accounting. Again, modified accrual in the governmental. Proprietary and fiduciary funds use accrual accounting, full accrual. Remember, governmental funds use the current financial resources measurement focus, whereas government-wide uses the economic resources. So the government-wide statements show a statement of net position. And they include all assets, capital assets, and liabilities, both current and long-term. So again, statement of net position, you may want to think of like the old balance sheet if this was a for-profit entity. Capital assets other than land, inexhaustible works of art, and construction in progress are reported net of accumulated depreciation. In the net position section, several amounts do get restricted. Restrictions are reported if the usage of the resource has been specified. So again, if we're designating something for future expansion, future renovation, that could be a restricted net position. The statement of activities, again, think of it like the income statement. And they present activities about the functions of the state or local government. The expenses are normally shown by function. Interest on general long-term debt is normally an indirect expense, and that's shown as a separate function. Related program revenue should be shown for each function. The net revenue from those activities are also shown, and the general activities are shown at the bottom. General revenues usually are taxes and such, since that's the primary revenue for a government. In the fund financial statements, there's a balance sheet which is done by each government fund. Uses modified accrual, does not include proprietary funds, component units, or fiduciary units. It has separate columns for the general fund and each major fund. Now, the balance sheet in the general fund does not report capital assets or long-term debts. Remember, they don't do that. And their fund balance section identifies non-spendable, restricted, committed, assigned, and unassigned categories. On the statement of revenues, expenditures, and other changes in fund balances for the city of Eastern South, usually the general fund is detailed in a separate column along with each of the other major funds identified. The current financial resources measurement focus is used. Expenditures rather than expenses are reported. Capital outlay, folks, is a reduction in resources rather than an acquisition. Again, in the general fund for fund accounting, we do not show fixed assets. We do not show the debt service as a reduction of a liability. It is an expenditure. Between the government-wide and the government fund financials is this, a reconciliation. Basically, the reconciliation begins with the change in the total fund balance and makes all the adjustments to arrive at the reported change in net position. In other words, going from that fund accounting basis to the accrual basis. What are those changes? Acquiring capital assets, recording depreciation, recording revenues and expenses that do not impact current resources, and issuance of long-term debt that increases the city's fund balance but not its net pension. In a fund financial, these are proprietary funds. Statement of net position will show individual information about major enterprise funds and all internal service funds. A single column reports the summation of all other enterprise funds. Specific information is available for major funds because of their size. Statement combines and exhibits all internal service funds because they are also proprietary funds. Proprietary funds utilize accrual accounting to measure economic resources. Statement of revenue, expenses, and other changes in fund and net assets. For proprietary, again, revenues, expenses, non-operating, and transfers for all the funds. Operating expenses are listed for each of the business type functions. Operating expenses are separately listed for services and supplies, depreciation and amortization, utilities, maintenance and repairs, and others for each major enterprise fund. The non-operating items are identified, including investment earnings and gain on disposal of a capital asset. and extensive information is available about the operation of each of the enterprise funds. We also will see in the fund financial statements for the proprietary the statement of cash flows, which again we've not mentioned up until this statement. Because a proprietary fund is similar to for-profit, it generally would show the statement of cash flows. However, instead of 3 sections, we have 4. Operating, non-capital financing, capital and related financing, and investing. Please note, the direct method is required for presentation. Learning Objective 10. Understand the presentation of financial statements for a public college or university. So again, public and private, again, will educate students with tuition, conduct research, maintain libraries, sports teams, and operate cafeteria. The difference in measurement basis and form of financial statements for private and public colleges or universities are private colleges and universities follow the FASB. If you are a university for the public, GASB has the authority. What are some alternate reporting options for the public colleges? Number 1, adopt the FASB requirements that all colleges and universities prepare comparable financial statements. Apply a more traditional model focusing on fund financial statements and the wide variety of funds that such school offers have to maintain. Create an entirely new set of financial statements designed specifically to meet the unique needs of public colleges and universities, and adopt the same reporting model for public schools. So again, these are some alternatives that are currently on the table for discussion. The public colleges and universities standard reporting model currently, though, is that the GASB has officially selected the 4th option. This one over here, that they use the same reporting as the state and local governments. With public funding, public schools often raise and accumulate smaller amounts of endowment funds in a private college. The decision creates a standard reporting model for public colleges and universities, but most public schools only need to prepare a single set of statements equivalent to those of an enterprise fund. And that concludes our discussion on this chapter. Again, we encourage you to reread the chapter and do the reading again before doing any and all exercises associated with this chapter. If there are any questions, please email. And again, we'll see you online.